Thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacted mortgage rates on a daily basis, whether it might come from economic calendar or headline news or possibly even geopolitical. But sometimes the market can quickly change, and good market sentiment change regards to good news and now bad news and vice versa. And that can get really confusing out there. So we try to get into the minds of what the investors are thinking and why they're reacting to such news and why the markets are doing what they're doing. So hopefully these will help you out if you're looking to refinance or purchase. You're probably following rates. If you're in the industry, you just want to see what's going on here. Hopefully this will give you these videos will give you what you're seeking. A little bit about myself is I am a loan officer. I do work with the national lender. We do loans in all 50 states. I'd love to earn your business if you're looking to refinance or purchase. Would be more happy to run the numbers for you if you're looking to refinance, if you're looking to buy, if you're looking for pre-approvals. We're here for you guys. But we're also like to be a resource for you folks. So if you guys got questions about anything, so please feel free to reach out. We're here to try to help you guys out as well. So let's begin with starting with the economic calendar. We got a lot today here. We'll start off with the retail sales, which is kind of a big one. This got a little bit more extra importance because yesterday I can't remember which one, but one of the Fed members did mention, I believe it was maybe Waller, let's wait and see on the data up to the FOMC over the next month, 2 weeks, and he did point out retail sales. Let's see what retail sales has as a report to see before making a determination if to raise the rates from 75 basis points to 100 basis points. So that's been kind of the trigger since the CPI report came out. But let's take a look at this. So this is for June. So May actually had a drop, contracted and that was revised slightly better from 0.3% to negative 0.3% to negative 0.1%. Forecast was calling for 0.8%, but it came in a little bit hotter at 1%. So it's good news, but not quite too hot. But also the revision helps a little bit too. Now, something to kind of look at, we don't usually look at these, but import prices, since we're talking about inflation, items coming into the U.S. only went up 0.2%, so that was pretty moderate. So that might show some tameness in terms of inflation. So that's good news. Now we've had this also, New York Fed Manufacturing, this is also known as the Empire State Index. This is kind of index that measures the manufacturing around the New York region. It's been contracting for the last couple of months. So here in June, it was minus 1.2. Forecasting for July was showing contracting and again at 2%. However, this time it actually went the opposite direction. It had a nice month at 11.1, so it was up 11.1%. Very good number right there. And then we got industrial production for the month of June. In May, it was revised lower, so it initially came out 0.2%, but it basically came at unchanged. Forecast calling for a 0.1% increase, and it contracted 0.2%. So we're seeing some slowdown in terms of industrial production, but let's wait and see what July's numbers look like. And then we got the inflation outlook. Again, we don't normally look at these, but if you just want to look at glance-wise, we do see a reduction on both of them. So the 5-year outlook and the 1-year outlook both show that coming down a bit. And that's probably why the consumer sentiment is pretty good. We had a 50, which is pretty low in terms of basically like a 40-year low, just like the inflation on the sentiment. This is back in June. Forecast was supposed to be a slight downward tick to 49.9. However, it did improve a little bit to 51.1 in July here. Now, this is a lot. If you go into the report, it basically the outlook again kind of goes to this outlook here that they see the inflation coming down and commodity prices coming down. That people felt a little bit better about things, that maybe we have peaked in terms of inflation. So this is where the sentiment out there got slightly better here. So I think a lot of it is that wait and see approach, what we're going to see. I think because we've heard a lot of terms out there, a lot of speculation that perhaps gasoline might go out there, like here in California, maybe it might reach $10 a gallon or, something outrageous like that. We've also heard stuff like possible global food shortages with what's going on out there. So these are all things that could be changed quickly, but in the meanwhile, I think people are we had a little bit of stagnant there, and things weren't as bad. So right now they're just kind of doing a wait and see as to where things are going. So let's take a look. Lastly, we got the business inventories. This is just kind of gives us indication that if businesses are building up, it looks like they're expecting to expand or not. So the April, it went from 1.2% revised a little bit better to 1.3%. Forecast supposed to keep that same trend at 1.3%. However, it came in a little bit hotter at 1.4%. So overall, very good day here in terms of economic data there. Also, on the stock side of things, we did get some more earnings reports, some favorable ones that came out this time last week, yesterday, not so favorable. Today, a little more favorable. So, stock market is actually in positive territory this week. Today, as most this week, I think it's been down, negative territory. In terms of respect securities, we're up 14 basis points. We were up a little bit higher just a few moments ago. So we did close a little bit below the 25-day moving average. However, today we're back above it. So this will give us a little bit better pricing today from where we were yesterday. Yesterday we ended up closing down 19 basis points. So it kind of puts us closer in line with what we saw. Pricing should be more comparable to what we saw on Wednesday, where we closed on Wednesday. So kind of give you an idea in better or worse and where we at in terms of pricing. So if you look at today where we're at on the chart here, we're basically in line with what we where we closed on Wednesday. So pricing should look like that. But we're also in yesterday, since pricing worsened, we're better. Pricing is better today than where we left off yesterday. Okay, so 10-year treasuries, we got 2.93, so we are down a bit more. We're kind of in the sideways pattern here, looking for, I guess, as you can see here, we're kind of more of a sideways pattern. So it's kind of looking more for a breakout. I think what we're going to do is we're probably going to get ready for the Fed meeting at the end of the month. They did say that the chance of 100 basis points did pull back a little bit as a result of these. What we're seeing here, which could be good news depending on what your perspective is on it. But the market seems to like that as well. They think that maybe the 100 basis point might disrupt the markets a little bit more than they had hoped. So that's kind of where we're at with things. Now, lastly, sorry about that, got a little helicopter or something flying by. Lastly, we'll touch on regular median. Sorry about the noise here. We'll touch on the median or average rate for conforming loan limits. They do have points built into them, and of course they are day delayed, so they're based on yesterday, so it should be a little bit worse. So the 30-year fixed basically is unchanged at 5.77%, and then the 5 or 15 years at 5%. So these are basically the same numbers we read yesterday for these. So it looks like they are unchanged for the most part. All right. If you guys got questions about anything, we're here to help you guys out. Please feel free to reach out. Even if you guys want a rate quote, we're here to help you guys out. We appreciate you guys. And if you guys do us a great favor, if you like these videos, please smash on that like button and share. We greatly appreciate it if you guys can help us expand our audience here. You guys have a great rest of your day. Enjoy your weekend. We'll look forward to you guys on Monday. Bye-bye.